This is episode 31. What's up, guys? Thank you for tuning in. Today we're going to talk about tax law. In particular, this is tax season. And if you've been watching the news, the coronavirus has pretty much affected the entire world, and it has affected the tax season. And in particular, President Trump pushed the due date back. He made it from April 15th to now is July 15th. So that has a lot of legal implications about how you go about affecting when you file taxes. And also is putting the IRS notice to not enforce those late fees and those fines when you're not filing taxes at April 15th. So that has a lot of legal implications. But today we're going to talk about just some of the tax strategies you can have when you go about filing your taxes. If you're just a business owner or a regular person, how you can go about filing your taxes. And first we want to just talk about just the right that the government has to tax you, because every now and then you'll see a video or you hear people talk about how the IRS doesn't have right to enforce income taxes on you, or how the government doesn't have right to collect taxes from you. But that's absolutely incorrect. In particular, because the 16th Amendment allows Congress to pass laws to collect taxes. And that's critical. That's very important, because there are not many amendments in the U.S. Constitution, and that's one of them. I mean, I guess I'll do a video one day talking about the different amendments. There's the first 10 amendments are considered the Bill of Rights, but there are also other amendments, and I guess I'll talk about many of those amendments as time goes on. But the 16th Amendment in particular, it says, here it is. It says, Congress shall have the power to lay and collect taxes on incomes from whatever source derived, without apportionment from the several states and without regard to any census or enumeration. That's important. So some of the critical words in that is that they have the power to collect taxes on income from whatever source derived. That is critical that you understand, because they can collect taxes on your legal activities as well as your illegal activities. If you know the story of Al Capone, they couldn't convict Al Capone on any of his criminal activities. He was doing like bootlegging, prostitution. They couldn't convict him. They could not connect him personally to any of those things. But they knew that he was making money. It's all his lavish lifestyle. So they got him on his tax evasion. Because the law is clear. Congress shall have the ability to collect taxes on income from whatever source derived. So if you're out here committing crimes, if the DA can't get you, if the feds can't get you, from the federal U.S. attorneys can't get you, the Treasury Department, the IRS, the FBI, they can combine their resources, everyone can get together, and they can get you on tax evasion. So it's important. It just doesn't pay to be a criminal. It just does not pay to be a criminal. I mean, technology got sophisticated. They can look at your transfer, they can look at your bank transactions, they can look at your family members' bank transactions and see and connect the dots to create a circumstantial evidence for you violating a law in one of these different departments. So it just doesn't pay to be a criminal at all. I mean, it just pays to just do what you can to uplift yourself in the best legal way possible. But also, it says another Article 1, Section 8, Clause 1 says Congress shall have the power to lay and collect taxes. It's laying it out there for you. But people may say, that's Congress. How does that connect to the IRS? I'm glad you asked. And because the U.S. Code, which is the federal statutes, it has a lot of laws about different subjects. In particular, Title 26 of U.S. Code 7601, it lays it out pretty clear. It says the Secretary, which is the Treasury Secretary, shall, to the extent he deems it practical, cause officers or employees of the Treasury Department to proceed from time to time through each internal revenue district and inquire after and concerning all persons who may be liable to pay internal revenue tax. It lays it out. The Treasury Department, which is the Secretary of Treasury, can authorize individuals to go out and look at you if you owe internal revenue tax. So that situation created the IRS, the Internal Revenue Service, and they have a tremendous amount of power, and they can pretty much lock you up and rob you of your freedom, take away your freedom if you're not paying your taxes. So that's important. So now we have the legal implications, the legal aspect of how the government can go after you for you not paying taxes. Let's talk about some ways to minimize your tax burden. Let's talk about some of the strategies to help you minimize your tax burden if you're an entrepreneur, or if you plan on being an entrepreneur at some point, some way. And the most central document of everyone, at least in the U.S., is the document 1040. That is probably the central document that you really need to know and really need to master. It lays all your income out, all your expenses out, and it also tells you you're going to get a refund now, because if you overpaid in taxes, the government will send you a refund check. And it also tells you if you owe money. It'll let you know if you owe taxes. But it's also important to know because there's other documents that will be attached to that document 1040. There's many schedules. For example, if you are a sole proprietor or you're a single member LLC, if you have an LLC and it's just you, you'll have to fill out the Schedule C. That's a document that you fill out and you put those numbers and attach that with your 1040 and you can mail it in to the IRS. And that document, Schedule C, it lays all your income and also help you lay out your expenses. So it's important that you understand what the Schedule C is, because if you're a sole proprietor or you have an LLC and you're the only member of an LLC, it's important to know that LLCs don't have stock owners. There's one class of individuals and they're considered members. So you will be considered a member. The C corporation has what they call stockholders, stock owners, because there's different levels. They can be a preferred shareholders, stock owners, or they can just be common shareholders or stock owners. That's important to know. So when they say you hear anything about members of an entity, they're primarily talking about the LLC. But if you have an S corp, if you are a partnership, or if there's a multi-member LLC, which means there are two or more owners of an LLC, you'll fill out the Schedule K1. Also, if you have a trust and there's money, there's distribution to the beneficiaries, you fill out the Schedule K1. So that's important. Those are some of the documents of that, because in essence, based on Congress having the ability to create laws, every tax thing, every tax regulation, everything dealing with tax is a law. So it has legal implications. So that's critical to understand. If you're an Uber driver, this is the gig economy. Individuals have contract jobs. Individuals may be driving Uber, maybe driving Lyft, or whatever app you may be driving. You can file some taxes. You have to file taxes on it. In particular, they'll give you primarily a 1099. That's a document they'll probably give you. The W-2 is another document they'll give you, and that's typically if you're like a full-time employee or whatever it may be, they give you W-2. But if you're doing a ride share, they may give you a 1099, and that's important because that'll show you how much money you've made with that ride share. And what you will do is, when you file taxes, you'll fill it out, but you also create you an expense sheet. And that's important that you're keeping track of your expenses. If you're paying for gas, if you're giving out water to your gas, you're giving out mints to people in your Uber, your Lyft. If you keep track of your mileage, you'll put all of that information and you'll fill it out. And in particular, you'll put that on your Schedule C. As I talked about earlier, you'd be considered a sole proprietor, or however you may be considered, a sole proprietor or a single member LLC, more likely because of a sole proprietor or independent contractor. So you have to fill out the Schedule C, and then you'll create all of that. You have calculate your mileage, your gas, everything. Create you a strong expense sheet calculating every single thing you spent, and then you can use that to offset some of the profit that you may have made from driving Uber. And also, you may have to fill out a Schedule SC. If you're a self-employed individual and you made a certain amount of money in that threshold, you may have to file self-employment taxes. I'm going to get my good friend Jeremiah Ramos on here, and he's going to talk about a lot more taxes and tax strategies that individuals and business owners have. We have a video that we did just talking about just different accounting strategies. He's a CPA in New York. We're going to get him on here, and we're going to bring you more value that you may not have known about, may have heard. But that's pretty much all I have. I mean, this is tax season. There's a lot of legal implications that we talked about. We talked about just the right that Congress have to tax you, how you can be taxed on all your income, no matter what source it comes from, legal and illegal. We talked about if you're a sole proprietor or LLC, the importance to fill out a Schedule C. We talked about the 1040. We talked about the Schedule K1. We talked about a lot of things in this video, and I hope you all enjoyed it. If you have anybody that may benefit from this video, feel free to share it. We also can talk about just if you get an audit from the government that you don't agree with, you have a right to appeal that audit. You have a right to appeal it. You can appeal it through the IRS, or you also can appeal it in the U.S. tax court. And there's many ways to go. Just because the IRS gave you an audit doesn't necessarily mean you have to agree to that audit. You have to agree to what they gave you. You can appeal it. That's your right. As a citizen, as a taxpaying person, you have the right to appeal whatever audit, whatever letter they gave you that's saying that you owe. So we talked about a lot of things in the video. I hope you all appreciate it. This is episode 31. Don't forget to like, share, and subscribe. And we're one step closer to 1,000 episodes. Thanks.
See, you want the fame and I want the chain. We ain't got the same focus. I came in the game with my own.